What's up, money lovers? Welcome back. Facebook or Meta stock down 25% today on a strong earnings report. It's utterly ridiculous. There's no reason this stock should be down almost 25% right now. So I went ahead and added to my position this morning. This is like the Netflix effect, similar to what we saw. Netflix kicked off the big tech earnings season here, and I thought their report was okay too. And the stock went down 20%. It has recovered a good amount since then, and I could see something similar happening with Facebook here. I mean, there's just no way that I can see it staying down here for too long. So let's get right into it and take a look at the earnings report. I think it was a very strong report overall. So as you can see, their advertising revenue by geography was up a significant amount to over $32 billion in Q4, up over $4 billion from Q3. It's up in every part of the world if you compare US, Europe, Asia, and the rest of the world, up pretty significantly in all of the different segments there. Just continuing their slow and steady growth here. So they brought in total revenues of a little bit over 33 billion, and of that, Reality Labs made up 877 million, and that is the segment that has their Oculus, the Quest 2, all that good stuff, which is actually operating at a pretty huge loss, which we'll get to in a minute. But even still, with that loss from Reality Labs, which this quarter was 3.3 billion, they still managed to have an operating margin of 37%. Monthly active users who use any of the Meta apps, including Facebook, Instagram, WhatsApp, is 3.59 billion, almost half of the world population. So not really sure what more you could want out of the company here. They basically have half the world using their products. Not sure how much better it can get. So as you can see here, for the year ended 2021, revenue increased 37% year over year. They brought in $117 billion of revenue. And of that, net income of $39 billion, up $10 billion from last year, or a 35% increase. I mean, everything seems pretty positive to me here. There are a couple headwinds that we will address in a minute when we get to their earnings call transcript. But just really quick, monthly active users up 9% year over year. So their ad impressions, this is the primary way that they make money for the full year 2021. Ad impressions increased 10% year over year, and the average price per ad increased 24% year over year. So these are all positives for them. So for the full year, they repurchased almost $45 billion worth of shares, and they've got $40 billion of cash as of December 31st. So now let's get to what some people may have seen as the issues and why the stock is down so much. They gave revenue guidance for 2022. They're estimating 3 to 11% year-over-year growth, which doesn't sound like much, and that's probably the main reason for such a drastic drop. But I think the company is, it's better to under-promise and over-deliver than to over-promise and under-deliver. So I wouldn't be surprised if they're just giving very conservative estimates, as it seems like a lot of companies have been doing that because, coming off these last couple of years of just such immense growth, it's very hard to grow 50% one year and then continue to grow, 10 and 20% even after that. But I think they're gonna do just fine, and they're just being conservative here. So obviously Facebook is facing a lot of competition these days, thanks to the rise of apps like TikTok, which are growing very quickly. So in order to combat this, Facebook is transitioning here towards short-term video like Reels. So they're going to replace some of the traditional elements like the news feed and other aspects that have been higher monetizing segments of the business. So in order to stay competitive, they're going to have to take a short-term hit, basically, they're saying, but they think that it will recover. They've done this before when they had to transition from being a primarily internet-based platform to mobile, and just updating Facebook over the years to stay competitive and kind of capitalize on these trends. While the collective IQ and attention span of the population will continue to shrink as we transition to these short form videos, it will be beneficial to Facebook, enable them to stay competitive, and over time, I'm sure that they will get just as much revenue from these segments as they do today. So as I said, they've made these types of transitions before with the mobile feed and stories, where we took on headwinds in the near term to align with important trends over the long term. So short-term headwind, long-term, they're going to be just fine. They've made many of these transitions in the past successfully. Now, so their investment priorities for 2022, obviously one is going to be Reels, staying competitive. Now, I thought this was really interesting. Their business messaging segment, they estimate more than 1 billion users are connecting with a business account across our messaging services every week. We're partnering with companies like Uber and GeoMart to help people book a ride or have their groceries delivered right from a chat. We're building new tools to make buying online better for people and easier to manage for businesses, and we believe this could be an important business for us in the years to come. So here's an example of, even though they may be struggling with old revenue sources, they're continuously innovating, and they have these new segments that are going to drive profits for years to come. They help a lot of businesses already to reach customers with personalized ads. And then another headwind here is this whole thing with, Apple's iOS changes, as well as new regulation in Europe. There's a trend where less data is available to deliver personalized ads. So this has definitely been a headwind for Facebook or Meta. They've been struggling with these changes, but they are rebuilding a lot of our ads infrastructure so we can continue to grow and deliver high quality personalized ads. I think that this is a short-term hiccup. They're going to be just fine long-term. We've made huge investments in strengthening our approach to privacy. Privacy has been a big sore spot for this company, obviously, so make of that what you will. But hey, at least they're trying. Now on to AI. This is one of the areas where we've routinely seen stronger returns on our investments over time than we've expected. Now it gets very exciting here. Advances in AI enable a lot of the experiences that I've talked about so far. Enables us to deliver better ads to people while using less data. It's core to our safety and security work. Now here's another bombshell, I think. Artificial intelligence is also going to play a big role in our work to help build the metaverse. We just announced our AI research supercluster, which we think will be the world's fastest supercomputer once it is complete later this year. Again, this is kind of the same thing I was just talking about in my Google video. You invest in these big companies, these big tech companies, which in this day and age are basically the blue chip companies because they have such strong moats and stable cash flows that it's enabling them to just do all sorts of crazy stuff. So you're getting this sound business that can also act like a growth company and just venture into all these new fields. I mean, you're really getting the best of both worlds of like growth and value here, I believe. So a new supercomputer, they think it could be the fastest one, complete later this year. It's going to enable new AI models that can learn from trillions of examples and understand hundreds of languages, which will be key for the kinds of experiences that we're building. There's lots of exciting stuff happening under the hood here. I mean, don't let the headlines fool you. And on the hardware front, with the Oculus Quest 2, people have spent more than $1 billion on the Quest Store content. They had a strong holiday season. Oculus reached the top of the App Store for the first time on Christmas Day in the US. This is the future here, I believe. Got mine right here. The Oculus Quest 2 is absolutely sick, and this is going to be the future. They're working on a high-end virtual reality headset and making progress developing Project Nazar, which is our first fully augmented reality glasses. So this company continues to rake it in with the advertising revenue. They're putting all this money toward these new innovative fields, industries of the future here, and this is exactly what you want to see. I mean, so as we said, a couple of those headwinds are increased competition. They're having to transition to Reels now, find new ways to monetize. They also have the iOS issue, which reduced their ad revenue. But some other short-term blips, cost of revenue increased 22%, driven primarily by Reality Labs, which runs their whole virtual reality segment with the Oculus Quest 2, etc. And R&D also increased 35%, driven primarily by hiring to support the family of apps and Reality Labs, as well as Reality Labs R&D operating costs. So for the full year, Reality Labs actually operated at a loss of $10 billion. But just think about this. How is a brand new company going to start doing something like the Oculus Quest 2 when it's a business that requires so much capital and there's going to be lots of losses? I mean, it's much easier to do that when you can take that money from your already sound business that brings in $90 billion a year, put some of that toward this versus just starting a brand new company and losing $10 billion. I mean, I think that they definitely know what they're doing here and that this is going to be very big. So there's obviously, some headwinds, some short-term issues that they're going to have to deal with, but I think that they're going to do just fine. This is one of the best companies in the world. They've got some of the best talent. They'll figure it out. They've figured it out every single time up until now. I see no reason why these issues should be any different. They've always been able to adapt. They've got cash of $48 billion on hand. I mean, they've got plenty of money to keep dumping into the Oculus and just see where it goes here, while simultaneously improving all other aspects of the business and making them more profitable. I mean, you can just see the immense growth year over year here. I mean, they've earned $117 billion of total revenue this year, $85 billion last year, $70 billion the year before that. This is going to continue to incrementally increase. I think that this is a very solid company for the next 5-10 years. So that's why I had to add more to my position today on this ridiculous dip. So let me know what you think in the comments below, if you agree or not. If you enjoyed the video, don't forget to like and subscribe so you catch all my new videos. This is Vinny from the Investment Club, and I'll see you next time.